morning, good evening, good afternoon, traders all around the world. This is FXPassion with another recorded webinar. And today is Melbourne, Monday. We are in Melbourne Monday, April the 15th. It's 11:45 a.m. Singapore, it's Monday, April 15th, 9:45, quarter to 10. Singapore. Madrid, it's Monday, but it's Monday night, so it's 3:45, right, a.m. And London, England, it's Monday, April 15th, but it's night, it's 2 a.m., 2:45 a.m. New York and Toronto, so USA and Canada, it's still Sunday, April the 14th. So it's quarter to 10 p.m. in New York and quarter to 10 p.m. in Toronto. Everybody, this is FXPassion, this is Forex trading for beginners, where our goal for you is to become consistently profitable, minimum 3 months, knowing when, how and why you make and or lose money. You should not be allowed to trade with real money until you reach the goal. What is the goal? To become consistently profitable. If you are not going to listen to us, here is the disclaimer: don't trade with money you cannot afford to lose, and the webinars are not investment advice. They are for educational purposes only. I'm not going to say to you that your job is to question, because this is a recorded webinar, but remember that 90% of traders who makes it between the 3rd and the 5th year of learning. For homeworks and or additional coaching or training or just questions, you can send questions to the Dukascopy webpage or to my Gmail or Skype or LinkedIn. So, if we are following this schedule, everybody, today is Monday, April the 15th, right? So, it's Trading Fibonacci Numbers. The title for today should be the Confirmation Fibonacci and the Rules. So, let's address the 3rd Fibonacci, which is the so-called the Fibonacci of the confirmation, or the confirmation Fibonacci. So this is the last one. So we learned so far about the original Fibonacci, then we learned about the contrarian, and then we have this is the last one in the series on how to trade the Fibonacci numbers, is the confirmation Fibonacci. Now, let's go step by step for the beginner trader. First, we have the original Fibonacci, and we're going to go slowly. And believe me, the difficult Fibonacci is the contrarian. Okay, so if you understand the original one and if you understand the contrarian, so the difficult part is over. And so we have the AB boundary, and let's color code this Fibonacci differently. Edit levels, Fibonacci original one, right? Green goes to green, blue goes to blue, red goes to red. So AB, and then we said that we want to trade in an uptrend, we want to find conformed C. So we had the sub A, right? We had the sub A, we had the sub B, and we had the sub C, and we had the sub D, right? Sub D. And most of the time our sub D equals the C of the original Fibonacci. Remember? Why? Because this is the extension of the contrarian Fibonacci, which is the lowest point inside the AB boundary after the B, before the market hits the extension. So we have the A, we have the B, capital A, capital B, so this is the A, this this is the B, now this is the C, and if green goes to green, and this is the sub D, we can project, right? We can project our D extension, which is up in here. So this is the D. And we have the A, B, C, D, capital A, capital C, capital B, capital D of the original Fibonacci. Inside the AB boundary we have the contrarian, right? Sub A, sub B, sub C, sub D. So we can draw the contrarian Fibonacci. Let's color code it differently. And retracement, there you go. Pink goes to pink, so sub A, sub B, sub C, sub D. Okay. Now, what is the confirmation Fibonacci? The confirmation Fibonacci is the Fibonacci that everybody goes in the same direction as the original Fibonacci. So if the original Fibonacci, the direction is up, of course the contrarian, the word it says that you are contrarian, the contrarian goes down in the opposite direction, but the confirmation Fibonacci goes in the same direction then as the original one. Okay, so this is the first easy point. Now, why do we use the Fibonacci of the confirmation? Come on. Okay. Sometimes the traders who are trading the Fibonaccis, sometimes we are, let's say that we are sleeping, or we are doing business, right? Or we are at meetings, or we are walking our dog, or we are on vacation, whatever. And sometimes, let's say that the market broke, right? The market broke the counter trend line of the contrarian Fibonacci. And let's color code it, the original one. Okay, so we wanted to trade this Fibonacci sequence. We are in an uptrend, and sometimes when the market finds the appropriate C, which is the confirmed C, so C is confirmed, and when the market finds the confirmed C, most likely 8 times out of 10, 9 times out of 10 is going to follow the Fibonacci sequence. And here is where we want to enter the market. We want to buy the C and exit at the appropriate D extension, with profit, of course. Okay, so this is our plan of attack. Wait for the market to confirm the C, wait for the Fibonacci of the contrarian Fibonacci to find the confirmed C, and when the market finds the confirmed C, we want to buy the market, right? So buy the market at confirmed C. Buy the market at confirmed C. Buy the market. Buy the market when? Not at, but when the C is confirmed. So when we talk about trading, this is what we want to do. Buy the market when the C is confirmed, possibly with the counter trend line break. So the best entry would be in here, right? So arrow, this would be our entry, right? The first candle after the market breaks the counter trend line break. But many times on many currency pairs, especially if you are trading on 1 hour, 2 hour, 4 hours, right? Many times we are not in front of the charts, we are not in front of our platforms, our trading platforms. Most of the time we are missing these opportunities, right? We could be sleeping, we could be walking the dog, we could have meetings, right? Whatever. We could be driving, fishing, whatever you like. But we are not in front of the charts, we are not taking advantage of this opportunity. And when this happens, as a beginner trader, many times you could say, oh, Elvis has left the building, or oh man, I missed the train, and the market already starts moving up and I'm here right now, right? The market, oh man, I lost this entry, I missed this opportunity, and the market is already moving. When, why? You know. So as a beginner trader we start to cry, right? And complain, and well, I have good news for you everybody. This is when the confirmation Fibonacci comes in place. Okay? So what is the confirmation Fibonacci? The confirmation Fibonacci is the Fibonacci that confirms the change in direction from the retracement to the extension. So let's write this down. You need to remember this. The confirmation Fibonacci is the Fibonacci that confirms the change in direction from the retracement to the extension. So this is why what the confirmation Fibonacci is for. So the confirmation Fibonacci is the Fibonacci that confirms the change in direction from the retracement to the extension. And how are we going to, or where we are going to draw it? Well, we are going to use the same rules, everybody. Okay, it's not that complicated. The difficult part is to understand how the contrarian Fibonacci works, but the confirmation Fibonacci is easy. So we are going to use the same rules: how to find the A, how to find the B, how to find the C, and where we are going to draw the Fibonacci of the confirmation. Well, of course, we are not going to draw the Fibonacci of the confirmation, or the confirmation Fibonacci, on the retracement, but if this would be the case, we would draw our confirmation Fibonacci on the first leg of the extension, because the confirmation Fibonacci is the Fibonacci that confirms the change in direction from the retracement to the extension. Okay? So let's dive into the chart, and we are going to use the AUD-CHF just as an example. Let's go on the 4-hour chart. 4-hour chart. Let me see if it's okay. Okay, there you go. So this is AUD-CHF, and as we said on Friday and on Thursday, we talked about this pair. So this pair was making lower lows, lower highs on the smaller time frame, and it changed direction. So we are going to start here drawing our original Fibonacci. We want to trade the Fibonacci numbers on the 4-hour time frame, right? And when you don't see, of course, we are not going to see the future. We don't have the crystal ball. We are just going to follow the rules. Where is the A? So the A is the starting point of the trend. Capital A is this one, right? So this is our A. Where is the B? The B is the first high as soon as possible after the A. So this is the B. It must be a high, right? This is the B. One central candle, two candles on the left and two candles on the right, and Fibonacci retracement tool. So this is our original Fibonacci on the 4-hour time frame on AUD-CHF. Now, when we are trading, we are going to try to identify the contrarian Fibonacci, right? So if this is what we see, we have the sub A, which in this point in time equals sub A equals the B, right? Because this is the starting point of the retracement, and our sub B must be a low. So let's wait for the market. Let's wait for the market. Bam! Now we have the sub B text. This is our sub B, and we traded this way, sub B, and we're going to color code Fibonacci retracement. We're going to color code our contrarian Fibonacci differently. Okay, so what we can see right now is that our sub B equals the C, right? So our contrarian Fibonacci retraced so deep inside the AB boundary that look at the extensions. So we are not, number one, we are not going to trade the retracement. Why is that? Well, because all the three extensions are below the capital A. See? So if white goes to white and red goes to red and yellow or violet goes to not yellow, yes, violet goes to violet, or pink goes to pink, all the three extensions, if you can see, are below the capital A of the original Fibonacci. Those are one of the best entries to enter inside the AB boundary. Okay? This sub B so far has an 80 to 85% chance to be the C, the conformed C. I'm going to delete the arrows. Those are just for you to see the extensions, right? White retracement, the extensions of the contrarian, white is below the A. The dark red is below the A. And of course the pink or the violet level 618503882 again are below the A. So we're going to delete the arrows and let's put again the A together. Okay, A. Now when this happens, everybody, you can easily delete your contrarian Fibonacci. You can leave it there, no problem whatsoever, but you can delete it, because if the market is going to wave up, if it's going to continue the uptrend, it's going to break the contrarian. So, and there is no point in trading it, because all the appropriate extensions, if you trade this, then you don't understand how the Fibonacci works. You cannot trade, everybody, this Fibonacci, the contrarian Fibonacci. You cannot trade this one. There is no logic in trading, because all the extensions are below the A. So we're going to delete, right? Oh, Passion, but the contrarian Fibonacci is still in place. Yes, it is, but it has no use. Okay? It's not going to help you in, I mean, it helped you to determine that this is our C, and this C is confirmed, everybody. It's a confirmed C. All the appropriate extensions of the contrarian Fibonacci are below the A. Okay? But there is no other use of the contrarian Fibonacci. You cannot trade this retracement if the market is going to move up. So this is our C, and counter trendline break. Let's see, the market moved, the market is moving, it's playing around. Okay, so we are here right now. This is our original Fibonacci. Okay, and let's let's say that we missed, because this is the 4-hour chart, we missed this entry. We missed this entry. We should have bought this bullish candlestick formation, not the best one. Okay, we should enter somewhere in here, but we missed the train. We were sleeping or playing with our kids or whatever, you know. We missed the train. Now, how to apply, where to apply the Fibonacci of the confirmation, or the so-called confirmation Fibonacci? Well, what are the rules? We have the same rules. So, where is the starting point of the extension? Of course, we are speculating because we don't have the crystal ball, but where is the starting point? Where would be the starting point of the extension? If this is the conformed C, and we have 80% chance, 85% chance that this market is going to wave up, and this is the conformed C. So where is the starting point of the extension? Well, the C is the starting point of the extension, right? And we are going to call this sub A, or you can call it conf, like confirmation A. It doesn't matter. You need just to have different names for the different Fibonacci's. I'm going to call it the sub A. Okay, so I have the capital A, B, C, D for the original Fibonacci. I have the sub A, sub B, sub C, sub D for the contrarian Fibonacci, and I'm using the sub A, sub B, sub C for the Fibonacci of the confirmation. Now, I'm going to use the same rules. If this is the sub A, where is the first sub B? Sub B. The first sub B is going to be the first high as soon as possible after the sub A, right? And I already have a high. And what I'm going to do, everybody, I'm just going to use the same Fibonacci retracement tool with the same colors, because this is the Fibonacci of the confirmation. Is the confirmation Fibonacci. And it's going to go in the same direction as it goes the original one. Okay? So, and now, even though I missed the train, I didn't enter at the C, which is the sub A. Now I can trade, everybody, I can trade the confirmation Fibonacci. Okay, so I have time, I have the second chance. I don't need to panic, I don't need to be angry, you know. So I overslept, so what? I can draw the confirmation Fibonacci and I can trade it, right? With the same rules, stop loss above or below the A, take profit to the appropriate extension, and I'm going to use the same rules. So where is the sub C? And what is the sub C? Well, the sub C is the lowest point inside the sub A, sub B boundary after the sub B, before the market hits the appropriate extension. And if I would bought this candle in here, this one, this is some kind of, not the perfect one, but this is some kind of bullish candlestick formation. And where is my projected? So let's clone. Where is my projected sub D? Well, red goes to red, so my sub D is up in here. And of course the risk reward is not good enough. Okay, so maybe you can trade it, maybe you don't, it's up to you, but I would put the risk reward if I would enter in here. So this would be my risk, 10 pips or 100 pips below or above the C, which is the sub A, and my take profit would be 10 pips in front of the projected, the extension. So it's 1 for 1, not the best trade, right? Okay? But remember the point. The point is here that if you miss the train, you have a second chance to re-enter. Okay? This is going to be much more useful when we're going to check the daily charts where the swings are bigger. But for the time being, let's just see how the confirmation Fibonacci works. So this is the market. We are waiting for the high, and now the market just hit the extension. It didn't stop at the red, but it went straight up in here. What we're going to do, everybody? Well, we learned, we are together for 2 months, and we're talking about the Fibonacci's for at least a month already. We are going to use the horizontal line, and we're going to move our sub A to our sub C, and we're going to move our horizontal line of the sub B to the sub D. If you can recall, we are doing the same thing all over and over and over again. And I'm going to keep track of the swings. Sub A to sub B, sub B to sub C, and sub C to sub D. So I have a new sub A, sub B boundary right now, and I'm going to trade it. I want to find the sub C, which is up in here. Let's wait, right? Let's see what is going to happen. Finally the market starts to retrace, so this is my sub C. And I'm waiting for what? Well, I'm waiting for a counter trend and break with the bullish candlestick formation. So let's wait, retraced even further down, which is okay. And I forget to, there you go. This is our new Fibonacci. So until now, let's wait, bam. Now this is my entry. Again, we have a deep retracement. This would be my entry. Bullish engulfing candle. This would be my entry. Let's color code this in green. Come on. This would be my entry, right? And red goes to red. Let's see what is going to happen. Market went up and sideways, up, sideways, bam, hit my D extension, right? So this is, again, risk reward is not the best one. In this trade we would risk more than we are making. So this we would not enter this trade, at least not up in here, right? So if we would yes, this was a difficult trade. We didn't enter. I mean, I wouldn't enter this one, right? Because after the market broke the counter trend line, it closed up in here. So I would risk that much to earn that much. Red goes to red. So this, I would not enter this trade. Okay, but remember the point. What is the point? The point is we missed the initial opportunity to enter at the capital C of the original Fibonacci. We missed this opportunity for any reason, but we can re-enter, we can trade using the confirmation Fibonacci. So let's see, sub A, sub B, sub C, and sub D. We're waiting for the high. Now we have another high. So I'm keeping track of my sub A, B, C, D. This is the sub D right now. Come on. What I'm going to do, again, always the same thing. I'm going to move my sub A to sub C, and I'm going to move my sub B, which is the confirmation Fibonacci, to sub D, and I have a new confirmation Fibonacci. So the best point, if you understand, the best point is that even though I didn't enter when I had the chance, even though I missed the opportunity to enter at the capital C, now I have the third opportunity to enter, I have the third opportunity to take advantage of these movements, of the Fibonacci movement. So let's wait, let's see what is going to happen. I want to enter on the counter trend line break with the candlestick formations and with the equity management risk in place. So let's wait. This is a good entry. This is our sub C, and we bought the market in here. Bullish engulfing candle. This was our entry. Okay, finally we found a good entry. Now green goes to green. We are going to put our stop loss 10 pips below the sub C, and we are going to take a ride until to the green. Now this risk reward ratio makes sense. Now this makes sense to me, and remember, we didn't enter at the C. If we enter at the C in here, the circle is moving. So all of this movement, all of this waving, all these waves would make profit, right? We would be profitable, but we didn't enter it here. We didn't enter because of any reason, but we are entering using the confirmation Fibonacci. And let's see how this trade is going to play out. So the market is moving up and down. Of course the market is going to wave, and bam, hit our appropriate D extension. Nicely done, right? So if you can learn how to use the confirmation Fibonacci, you can re-enter the swings, you can re-enter the original Fibonacci. And also remember that the Fibonacci is not 100%, but it's 80%, 85%. Okay? So I have the new, let's wait, this is the new high, which is the market just hit our D extension. What we're going to do, always the same. Sub A goes to sub C, and the sub B goes up in here, goes to the sub D. And I'm going to keep track of the swings. So sub A, sub B, from sub B to the sub C, and Fibonacci retracement tool. There you go. And I believe, well, there is more coming, of course. What I want to do, I want to enter at my sub C with the counter trend line break, which is this one. This would be our, let's color code this in black. So this would be our counter trend line break. We would enter in here. This is our entry, and let's color code this in green. Right, again, risk management, risk reward ratio is okay. This is our risk, and we are going to take a ride to this 1618, the extension. Green goes to green. So where is my sub D? Wait, it's up in here. So let's see how this is. Oh, and we are here right now. So this is the entry of the confirmation Fibonacci. counter trend and break. Stop loss 10 pips or 100 pips above or below in this example, right? Below the sub C, and we are going to take the right to the sub D. If you can analyze all of this, what happened from the beginning, right? We missed the C, okay? We missed the C, and we had 1, 2, 3, 4. The fourth, together we had 4 opportunities to enter the market, okay? Now, remember everybody, I'm going to delete the Fibonacci, the confirmation Fibonacci. Remember, together with the confirmation Fibonacci, you need to adjust the capital one, okay? So this exercise was just to show to you, if you miss the train of the capital A, B, C, D swing, you can enter and trade the Fibonacci of the confirmation. So I'm going to delete right now everything. Delete, 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 delete. Come on, delete, delete, okay, delete, delete. Delete the swings. Okay, there you go. Remember, you need to adjust. The most important Fibonacci is the original one. This is the strongest. A, B, C. Red goes to red, D. Okay, so A, B, C, D. A goes to C. Come on. A goes to C. B goes to. Let me just see if this is the. Yeah, I'm not so sure. Let's see if this is the extension. So the high is at 0.71185. So no, this is not the B, because our red level is at 0.1192. So it's the next is the B high. The next high is the B high, which is going to be this one. There you go. This is the B, and this is the C right now. So A to B, A, B, C, and as you can see, everybody, the market just hit our D extension today, right? The market is up in here. It just hit our D extension. So we are waiting for the market to form a high. We are waiting for the second candle on the right, and we are on the 4-hour chart, so we need to wait in order to see if this high is going to stay like this or if the market is going to push higher. Okay, so we are in the second, and as soon as the market closes the high up in here, we are going to adjust our original Fibonacci, capital A, capital B, capital C, capital D, and we can project, this is going to be the new ABCD. It's not confirmed yet, we're waiting for the market to close a high, but this is a projected Fibonacci. And with this, when this happens, the game starts all over again. So we're going to trade the contrarian first, trying to enter with the confirmed C, and when the time comes, we are going to start trading the confirmation Fibonacci, or the so-called Fibonacci of the confirmation. Okay, everybody, so happy Monday. This is the first webinar in this week. See you back again tomorrow with more examples on how to integrate the 3 Fibonaccis. So we have 3 Fibonaccis now: the original Fibonacci, the contrarian Fibonacci, and the Fibonacci of the confirmation, or the so-called confirmation Fibonacci. Until tomorrow, stay strong, trade with passion, and this is FXPassion signing off.